high fuel prices are not enough. Now, the Reserve Bank this afternoon has decided yet again to hike the interest rate by 75 basis points. That's our breaking story this hour. Now, you and I will have to further tighten our already tight belts. I wonder how the happiness index is looking like at this moment. Are we going to be paying much more for everything? What's the impact on us? Let's get some more reaction to the interest rate hike announcement a short while ago by the Governor of the Reserve Bank, Lesisha Kganyago. I'm joined now by Mervyn Abrahams from the Pietermaritzburg Economic Justice and Dignity. Good afternoon, sir. Thank you for your time here on today. Welcome to eNCA. First up, your reaction to the announcement that interest rates have been hiked by another 75 basis points because the Governor of the Reserve Bank says they have to make sure they bring down or contain inflation.
Good afternoon, Dan, and good afternoon to all your viewers. Yes, we are also concerned about the level of inflation. The question is whether a 75 basis point will be too strong for the economy. What we have seen, Dan, is that inflation is beginning to come down slowly already. We've seen that in the CPI, where inflation has come down from 7.8 to 7.6% over the last month. We have also seen that in our household affordability index, that the month-on-month increases in food prices are getting less and less and less. And what we were expecting is that the governor would and the Reserve Bank would have allowed the process to go till their next meeting in order to see whether we are seeing a permanent decline of inflation or whether it is just a temporary respite.
Well, he said they couldn't wait until November. That's when their next meeting is, because there are so many unknown factors and a little bit of uncertainty and unpredictability about how some of those pressures that are on inflation in South Africa, how they would behave. You don't buy that?
So Dan, essentially we have to look at how is the South African consumer at this point. What's the state in the consumer? Now, we have seen that in many households, in many companies, we are just beginning to recover from the COVID period, where households have taken on large amounts of debt because their wages have been cut or because they had no wages during the COVID period. So now debt servicing will increase massively for those particular households. And the net result of that will be that there will be less money to purchase food, less money for transport, less money for all the other essentials, as we are paying more to service our debt. The real worry point for us is whether this will have an impact on GDP, whether this will actually signal a contraction of our economy. Because last month we have seen a 0.2% contraction in our economy. And if our economy contracts any further, we are looking at possible job losses in the next couple of months. And that might actually be worse for the South African economy than a 7.8% inflation rate at this moment.
In your view, where are the trade-offs here? I mean, it's a very difficult balancing act, as you said. GDP is not growing. Our economy has not grown. Even the governor earlier saying that the forecast is like 2.1% in 2024. That's very small for a country with so many challenges on top of the energy crisis that we're facing. How would you balance that? If you were the MPC, what would you focus on?
So Dan, it is quite clear that South Africa's biggest problem, economic problem, is the fact that our economy is not growing fast enough. We are not adding enough jobs. We are draining the fiscus in terms of social grants because people are not working. And so our main priority economically is to grow our economy and to inject some life into our labor market. And it seems to me that a 75% basis point rate increase is a massive increase. and that could possibly temper any kind of job growth or economic growth. And when our economy contracts, the pain that is suffered is much more. I mean, really, Dan, what is presented to us is 5% inflation and a job, or 4% inflation and no job. I mean, those are really the two issues that confronts us, and it seems to us it's better to have the job and to grow the economy and live with that level of inflation at this moment, because inflation is in fact beginning to come down. Global commodity prices are coming down. Fuel prices are coming down. Imported inflation are beginning to come down. We just need to give it the time to make its way through the economy.
They're beginning to come down. Could they be sustained? Maybe the Reserve Bank is concerned that there could be something else on the horizon that could change that decline and halt that scenario you're painting.
Yes, well, I mean, the only way from our perspective where we are today, Dan, of course, there might be other risks that might come, that might not come. I mean, those are all that the governor was speaking about, and the modeling are about risks that might, but if they might not. So those are into the future. Let us look at the situation today, and the situation today is that inflation is beginning to come down. I would raise the question about whether the problem is not around massive inflation, or the problem is rather the fact that global prices have come down, and we are not seeing that. We are seeing it at the pump for petrol, but we're not seeing that at retail level. I would rather have us investigate why the cheaper food imports are not leading to cheaper prices on the shop floor. It seems that therein lies a problem that possibly we could solve, even though it's not the Reserve Bank's issue. But that in itself might also mean a reduction in the level of inflation.
So to sum up your reaction to this interest rate hike as we conclude, Mervyn, you are not happy. You think we deserved a bit of a breather at this stage where we are at today, ahead of the next meeting in November, because largely we are seeing some food prices coming down. We are seeing a decline in the levels of inflation.
Exactly, Dan. And what our economy needs at the moment is it needs consumer demand, it needs people to buy and to sell so that we can grow our economy and we can create jobs. That's what we need. And this interest rate will actually mean that will not be realized over the next 3 months.
Thank you very much, Mervyn Abrahams. He's, of course, from the Pietermaritzburg Economic Justice and Dignity Organization. Not happy with this new higher interest rate at this time for the reasons he's just explained.